A new outlook on XRP is bold. We are calling for a mega crash, but predicting massive upside immediately after.
At first glance, that sounds contradictory. But his analysis focuses on long-term structure, not short-term price swings or market noise.
Don't confuse volatility with true market structure. Something only a small percentage truly understand. Look at this ascending triangle pattern on the logarithmic scale. We are looking at a huge breakout potential right here.
Based on this structure, we calculate a measured move target of $225 for XRP. It's not a promise, merely a technical possibility.
As part of a bigger system shift, where crypto markets may undergo a major transformation in valuation.
On a standard chart, however, his outlook is more conservative, placing XRP in a range between $4 and $7.
That's a big difference. It shows how chart perspective, logarithmic versus linear, can drastically change price expectations.
We are now entering the expansion phase. By applying these Fibonacci levels and utilizing cycle analysis,
In this phase, XRP could potentially reach between $13 and $27, depending on how the cycle unfolds.
But the analysis doesn't stop there. Egrag also presents a macro-level scenario targeting a potential $100 valuation.
Unlike technical targets, this $100 projection is based on broader market dynamics, not just chart patterns.
Interestingly, the term mega crash doesn't mean price collapse in his model. It reflects a structural market reset.
His inverted chart may look bearish at first, but the projected trajectory actually trends upward over time.
This suggests that short-term dips could be part of a bigger bullish structure forming in the long run.
In other words, what looks like downside noise might actually align with a much larger upward move.
Your theories don't account for this volatility. The technicals are signaling a clear reversal right here.
That's short-sighted. Global interest rates supersede any pattern on that screen.
Forget the traditional chart patterns. It's macro liquidity and central bank policy that are the primary drivers of these market trends.
This highlights a key debate in crypto. Are prices driven by technical structures or global economic conditions?
The $225 target is absolutely realistic. When we take the current macro factors into account, the data strongly supports this valuation moving forward.
Egrag's outlook ultimately blends both worlds, charts for structure and macro trends for long-term valuation shifts.
Framework A clearly indicates an upward trend. However, analyzing this through the lens of scenario 2 gives us a more conservative projection, highlighting the variables at play.
So is this a mega crash or the start of something massive?